everyone, myself is Larpreet Singh, and today we're going to discuss about revenue recognition. Revenue recognition is a technique which we use to measure the revenue of any organization at any critical point of time. There are three basic steps which we use to calculate the revenue. The first one is performance, under which the seller sells its goods and services in the market. Second one is collectability, and in this section the seller gets like money from the market where he sells his goods and services. Third one is measurable. Under this, we use revenue cost and accounting standards to calculate the revenue of that organization or of that person. Further, we have studied two research articles to support our studies. The first one is Financial Statement Preparers Revenue Decision, and the second one is Revenue Frauds. And the first one, it is used basically by the managers, and it has two different types of accounting standards. The first one is rule based and the second one is principle based. Under rule based accounting standards, the revenue is recognized basically by the rules and regulations, whereas in principle based revenue recognition, we used concepts and principle. It's basically like the concepts which we use to recognize the revenue, and it helps in making the study of the revenue recognition much more easier. That's all from my side, and my team member will continue with the rest of the presentation. Thank you.
Hello, I would like to explain rule-based and principle-based accounting standard system. In a rule-based accounting standard system, it is based on the rule of accounting system. It applies the rules of accounting in very detail, and point to point information is providing. A rule-based accounting standard system comprised to sustain the rule and regulation of the accounting standard, which is based on revenue recognized. It provided a basic assumption and a common base to knowledge on the basis of which is a decision to take. And other is a principle based accounting standard system comprised to concept based on the principle, which is more specific guideline, and which is good opportunity to understanding the concept and better, and it provided better opportunity to judgment of the based on the accounting system.
I would like to explain revenue recognition, fraud detection technique, and risk management. Accounting principles formulated number of conditions the recognition the revenue, but instead of all the principles, sometimes revenue or frauds while recognition of revenue. Revenue recognition frauds refer to the frauds which happen during the revenue recognition is an organization. This research article main focus on the frauds in the revenue recognition principles of accounting is an effective and efficient manners, and the fraud detection techniques. Financial ratios is an important technique used by accountants to detect the frauds in an organization. The financial ratios included three traditional categories included risk management and lastly risk management theories. Risk management theory is based on an analysis of risk management and reducing the risk factors in an organization. The risk is frauds of management can be identified and analyzed by the auditors that detect and prevent the frauds in revenue recognition is an organization. And lastly, methodology used in risk management theory is qualitative and it included numerous techniques.
My friends and members of this group have presented the report on revenue recognition for the subject accounting theory and current issues. I, Navjot Singh, now concludes this report. We can say that revenue recognition plays an important role in every organization. It's an essential part of every organization in maintaining not only the revenues but also the expenses. If these revenue recognition policies are implemented effectively and sound, they can help us in detecting frauds more efficiently and more effectively. We also discussed two different standards of revenue recognition standards. Those were IAS 11 construction contracts and IAS 18 revenue. This report further indicates that revenue plays important role and significant role in any company's or organization's financial performance. This can be achieved by maintaining the balance of cash outflow and inflows, which affects the financial performance of the company. Now we conclude this report on this note. Thank you for your time.